So, with respect to this new view on gold, so I've been looking at a few things. Obviously, volume areas and value area highs and value area lows being the main one. So, what I've been looking at is pretty interesting. So, on a week by week basis trading, if we do follow this, and if we can mark value area levels like this, and then trade, let's say from the start of the week, uh, and then go lower time frame, and then add chart patterns. Yes, so we are done with what we need. So these are our levels. Firstly this one and then this one. Obviously this has the head and shoulder pattern, all that ready, and to reject from here to go lower at the start of the week, and we can see what happens when it actually does that and just creates low. But for the next iterations as well, we'll see what happens. We'll actually observe how we can trade this area on an intraday basis every day, and how that can give us really high quality trades only week per week basis. Obviously this wedge has formed, but yeah, this is not trading zone for us, so we don't need to be concerned with it at all. We wait for the price to come here or go here. So it then again it comes in. Still waiting and waiting for this to test these levels. Obviously the price now testing and breaking down from there, and we can see that the rectangle had formed around the same level before even this created. So that this broke the rectangle and then broke the level and then closed below. So at this point 2005 could be a sell point for us, because it's creating the lower levels for us, and the price is breaking below that value area low from last week, and it eventually goes lower around $30 or so. Then again, then a bearish flag is there, and when the flag is raised, uh, it would have fallen more, but it did not actually do that, and then created something else and just went on the sideways, and again got resisted around the same level with the head and shoulder pattern, then with a bearish flag, which took the price lower around the same bottom, then created a double bottom, again went to that level, rejected. So we can see these interactions with previous weeks important level, and because this is a volume area based and value area based, it's working like in a way that we would not see it work like with normal price action, normal other indicators. They would not catch these levels as smoothly. So this is something that we get right off the bat on Sunday night. We know where those levels are. So that would be very helpful for us to trade. And even if we look at a different week, it's the same case. It's the same scenario over and over again. If we remove all this, if we remove all the drawings and chart patterns, yeah, so we can see how the interactions happen. So this is previous week's high level, and the price interacts with that and falls. The previous week's point of control area on volume. This is volume point of control. This is price point of control. It's different. We can see here. So this at this point it interacts here and then falls below. It interacts here and then falls below. So there is a lot of things that to take into consideration. Even if we look at the previous weeks, this value area low and falls below. And again, this last week's value area high, it broke, created double top, fall below. It was the value area low here, price rejected time and time again here, confirmed. Similar things happen before as well. I'm coming to this next point. What happens is, so when price opens a week above the value area high of the last week, something like this, what happened this week. So when it opens like this, that week is bullish. That week is carrying volume and bullish iteration with it from the start. When that happens, when something is breaking value area highs of the previous week like that, the week is generally going to be very heavily bullish, which like it has been. and then yeah, obviously at some point it will stop, but it will be heavily bullish. We can long Monday and carry that towards the through the week, or we can just focus on longs and do less high quality longs even. That will actually work. So if we look at this week, these were not, so Monday, this is Monday. So what that tells us is that will not get many quality longs, but those longs will work nonetheless. So these are not quality longs. These are not quality longs, not quality longs, not quality longs, because we are not getting our levels at this point. Maybe a bit better than the previous ones, but these are not quality longs. Neither of these are quality longs. But everything worked through Tuesday night. So and Tuesday only, then it stopped and tried to then correct, and it's ranging since then. So this extra indicator that we are getting with the TPO, it's something that can give us a very fine-tuned value areas at the start of the week where we can trade from. We don't need to go which level is important, which level is not, because it's considering a lot of things. It's considering the volume profile. Obviously, the volume profile is the middle one. So there are two kind of volumes. The two kind of things that price is actually considering. One is price and one is volume. So this area that we are seeing, sorry, it's not this. For some reason it's not working. Or whatever. The volume. Oh yeah, now it's printing because it's zoomed out. So there are two kind of volume, two kind of indicators. One is the point of control here. This is the time based area. This is the time based area. It is generally going to be in the middle always. This value area is this point of control is the volume point of control. It can be on either side. Let me share an example where there is significant difference between the point of controls. So let's find one. Maybe this one only. So here we can see, if we zoom in, the time point of control is in the middle around here, but the volume point of control is here, and that is a more critical level. So this is a more critical level on all situations. This area is a much important level, and that we see this time and time again, how important it can turn out. So I think yeah, this is something that on gold. I think additionally, gold is what we were facing with this MA thing. We don't particularly have levels because it's always trending and trending. Obviously, trend is good, but it is important to look at the market from an overall point of view. Uh, from where it can turn, from where it can reverse, because we don't know what will happen in this period. What will happen in this period? This is no trading zone. This is no trading zone. But why is this not a trading zone? That we have to understand through that. So I think what we have on the MA ribbons on the 5 minute and the 30 minute uh, can stay, and this time price opportunity will only make it better and also give additional trading ideas, additional trading confirmations, while not complicating anything. It's not creating like Fibonacci levels or complication or pivot level complication. It will have three levels at the start of the week: value area high, value area low, and point of control. Those are the three levels at the start of week that we will have, that we can trade from, and all our execution will be with on the MA ribbons on 5 minute and 30 minute and 15 minute, whatever, 5 minute and 30 minute, for short term and long terms impulses. So it will give us a very nuanced approach and very clear idea of what the price action is doing, and also catching the trend when things doesn't seem easy to catch the trend, like it happened on Monday. So neither of those situations were a good trading situations. But if we had the knowledge from the time price opportunity that this was a scenario that was going to go like this, and then we could have acted on that information and traded the market in a more aggressive manner. So that's I think all from the research that that I have on the gold part. I had similar notes on crypto as well. How we can use this to trade the intraday Bitcoin and Ethereum and Solana that we were talking about. But I think for gold, that's about it.